BRICS currency could end dollar dominance. Talk of de-dollarization is in the air. Last month, in New Delhi, Alexander Babakov, deputy chairman of Russia's State Duma, said that Russia is now spearheading the development of a new currency. It is to be used for cross-border trade by the BRICS nations: Brazil, Russia, India, China, and South Africa. As one economist put it, Europe is a museum, Japan is a nursing home, and China is a jail. But a BRICS-issued currency would be different. It'd be like a new union of up-and-coming discontents who, on the scale of GDP, now collectively outweigh not only the reigning hegemon, the United States, but the entire G7 weight class put together. Foreign governments wanting to liberate themselves from reliance on the US dollar are anything but new. Murmurs in foreign capitals about a desire to dethrone the dollar have been making headlines since the 1960s. By one measure, the dollar is now used in 84.3% of cross-border trade, compared to just 4.5% for the Chinese yuan. Nevertheless, at least based on the economics, a BRICS-issued currency's prospects for success are new. However early plans for it are, and however many practical questions remain unanswered, such a currency really could dislodge the US dollar as the reserve currency of BRICS members. Unlike competitors proposed in the past, like a digital yuan, this hypothetical currency actually has the potential to usurp, or at least shake, the dollar's place on the throne. Let's call the hypothetical currency the BRIC. If the BRICS used only the BRIC for international trade, they would remove an impediment that now thwarts their efforts to escape dollar hegemony. Those efforts now often take the form of bilateral agreements to denominate trade in non-dollar currencies, like the yuan, now the main currency of trade between China and Russia. The impediment? Russia is unwilling to source the rest of its imports from China. Enter, at last, de-dollarization. Is it realistic to imagine the BRICS using only the BRIC for trade? For starters, they could fund the entirety of their import bills by themselves. In 2022, as a whole, the BRICS ran a trade surplus, also known as a balance of payments surplus, of $387 billion, mostly thanks to China. The BRICS would also be poised to achieve a level of self-sufficiency in international trade that has eluded the world's other currency unions. But the BRICS would not even need to trade only with each other. Because each member of the BRICS grouping is an economic heavyweight in its own region, countries around the world would likely be willing to do business in the BRIC. Goods produced in one country can also circumvent trade restrictions between two countries by being exported to, and then re-exported from, a third country. That's often a consequence of new trade restrictions, like tariffs. American and European governments have prioritized Russia's economic isolation. Nevertheless, some US and European goods continue to flow into Russia. The costs for consumers are real, but not catastrophic. As officials in BRICS countries grow increasingly emphatic about their desire to de-dollarize, with today's Russia as an upper bound of how bad it could get, the risk-reward trade-off of de-dollarization will look increasingly attractive. To displace the dollar as a reserve currency among BRICS, the BRIC would also need safe assets to be parked in when not in use for trade. Is it realistic to imagine the BRIC finding these? Yes. For starters, because the BRICS run a trade and balance of payments surplus, the BRIC would not necessarily need to attract any foreign money at all. BRICS governments could use some combination of carrots and sticks to get their own households and firms to buy BRIC assets with their savings and effectively coerce and subsidize the market into existence. But assets denominated in the BRIC would actually have characteristics likely to make them unusually attractive to foreign investors. Among the major drawbacks of gold as an asset class for global investors is that, in spite of its risk-reducing value as a diversifier, it does not pay interest. Since the BRICS reportedly plan to back their new currency with gold and other metals with intrinsic value, like rare earth metals, interest-paying assets denominated in the BRIC would resemble interest-paying gold. That's an unusual characteristic. It is one that could make the assets denominated in the BRIC attractive to investors who want both the interest-bearing property of bonds and the diversifying properties of gold. Sure, for BRIC bonds to simply function as an interest-bearing version of gold, they'd need to be perceived as having a relatively low risk of default. And the debt even of sovereign governments in the BRIC countries has non-trivial default risk. But these risks could be mitigated. Issuers of debt denominated in the BRIC could shorten debt maturities to lower the riskiness. Investors might trust a government in South Africa to pay you back 30 from now, when the unit of time is days but not when it is years. Prices could also simply compensate investors for that risk. If market participants demanded higher yields for buying BRIC assets, they could likely get them. That's because BRICS governments would be willing to pay for the viability of the BRIC. The BRIC, to be fair, would raise a litany of thorny practical concerns. Used primarily for international trade rather than domestic circulation within any one country, the BRIC would complicate the job of national central bankers in BRICS countries. Creating a supranational central bank like the European Central Bank to manage the BRIC would also take work. These are challenges, but not necessarily insurmountable ones. The geopolitics among BRICS members is also thorny. But a BRICS currency would represent cooperation in a well-defined area where interests align. Countries like India and China may have security interests at odds with each other. But India and China do share an interest in de-dollarizing. And they can cooperate on shared interests while competing on others. The BRIC would not so much snatch the crown off of the dollar's head as shrink the size of the territory in its domain. Even if the BRICS de-dollarized, much of the world would still use dollars, and the global monetary order would become more multipolar than unipolar. Many Americans are inclined to lament declines in the dollar's global role. They should think before they lament. The dollar's global role has always been a double-edged sword for the United States. But the side that cuts into America at home has been sharpening, and the side that cuts America's enemies abroad has been dulling. But these costs have only grown over time as the U.S. economy shrinks relative to the world's. If the BRIC replaces the dollar as the reserve currency of the BRICS, the reactions will be varied and bizarre. Either way, the dollar's reign isn't likely to end overnight, but a BRIC would begin the slow erosion of its dominance.